The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all. Oh, do I have an echo? No, it's gone. Okay, and welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And, well, we're off 9 points on the S&P cash, off 59 on the Dow. NASDAQ's off 82. And kind of cut losses in about half. The president's speaking right now on the blower. And we'll see what's going on. I thought we'd probably wait till 2 o'clock to start moving up in the day. Of course, it's fun buying this week. And, of course, on Wednesday at 2 p.m., we've got the Fed. So my guess is we're probably waiting for that Fed. Had a little bit of volume so far today. I suspect that volume will taper off over the next 2 days until we get into that 2 p.m. time frame for the Fed and their interest rate decision. In the meantime, we already have a caller, and that's Larry. How you doing, Larry?
Yeah. How you doing, Dave?
Great.
Okay. I'm calling about both really the XLK plus the IWF. And the reason is I really think you could illuminate the meaning of, tick up, tick down for both. And when you go to the Wall Street Journal, U.S. stocks, the money flow section, on July 27th, the IWF and the XLK were the top selling on strength issues. And they had a whopping, the IWF, for every uptick, it was 7.53 to every downtick. So people were selling over 7 times as many shares. Every time somebody just bid it up, they'd sell into it. And sure enough, that was a big, strong down day followed by today. Mm-hmm. So a guy like you, you're really good with math and numbers. How is that usable information, or is it just too late?
It's not unusable information, but let me ask you this. In fact, I'll tell you this, and that is that many of it depends on if you're talking about 1 hour or 30-minute charts, or if you're talking about daily charts.
All right, let's stick with daily.
What is your time frame that you're looking at right now?
Well, I would want to use it. How would a guy like you use it for picking a top, let's say, a multiple day trend?
Well, one of the things I would look at, of course, is the top, and I'd also look at volume. Now, you had, 3.2 million shares at 151.91, and that suggests that you're at least probably going to see that retested high. You've got another high at 148.18 that was at 3.2 million shares. You did have a lot of volume on Friday. Today, not so much. Pretty light volume. 145.75 goes back to January 29th. You broke through that. You really didn't have a sign of strength. So as far as I'm looking at this, I don't let one day say everything for the market. It should have a kind of consistent change. You had about the same energy on the way up from the 133.57 low of April 25th to the 148.18 high as you did from the 142 low of June 28th up to that 151.91 high. So I would like to see volume drop out and energy drop out for some kind of big high.
Okay.
And
David, is a ratio of ticks of selling, over 7 times as many people selling on any uptick is there a cutoff for what would show distribution, earnest distribution?
If you're talking about inter-day data, I don't think so. There's an old saying in Jesse Livermore's book, I think it was, maybe it was in Wyckoff's book, and he said using minute charts is like telling what day it is by looking at the second hand on your watch. You look at a calendar for days, you look at, ticks for very short-term trading, and why everybody was selling. What you had on Friday was nobody buying downside puts. You went from everybody buying downside puts on Thursday to nobody buying downside puts on Friday. The put call ratio for the VIX, which is the out of the money puts and calls for the S&P 500. So we're not talking about any in the money, but it's an oscillator of 24 and 36 days. You had everybody. I mean, it was like 85, I think it was the put call ratio on Thursday, and Friday it was 52. Okay. So we had everybody hop on board, and the big guys of Wall Street weren't buying downside protection in the VIX. That tells me that they, at least at this point, they got short on the right day and they covered the next. So I don't see a lot in here that has any kind of, I'm telling you that normally I see a handful of things at highs. That is a lot of stocks testing previous highs and failing on light volume. Or I see everything hitting a high with some kind of euphoria. Yeah. And I don't see it. I generally see CNBC and everybody yelling and screaming
things, and you go, maybe this has great significance. Apparently not. I don't know. Yeah. Okay.
Say that again.
No, you wander into some data, and to me it looked pretty startling. There's over 7 times as many people wanting to sell on any given uptick. To me, that would have been, that was strong distribution on that particular day. It doesn't mean, like you're saying, it doesn't mean the trend's in place,
Right. A trend is multiple days, right?
Yeah.
So,
yep.
If I would have seen, now that's one thing. Now, the second thing is also, do you see huge volume in the actual individual stocks? Now, a couple of them you did with Facebook and stuff like that, right? So you can see that selling in something like Facebook has a contagion in all the rest. And maybe that's what we saw in some of those, right? Because Facebook was selling, everybody had to sell other things.
David, Facebook's the third listing. And actually, I didn't even notice that. Facebook that day, we were talking about the 27th of July, had no urgency in distribution according to just ticks. The ratio was 1.16 of tick up to tick down.
We're going to the break. We'll be back in a minute with Larry. Hopefully, we're going to answer the rest of his questions. Be back in a second.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey, you still there, Larry?
Oh, yeah.
Okay. So I looked it up on etfdb.com, which is got a lot of information on ETFs. If you just put a stock in it, it'll tell you all the indexes a particular stock is in. And if you just type the ETF number, it'll tell you what everything's in the ETF. So Facebook is, or at least for this, is last reported is basically 3.1%. The highest weighting in this index was 7% with Apple. So if you're going to start selling, and I'm sure that Facebook is in at least 10 other big ETFs out there. So you get one selling, everybody's got to sell. The ETFs got to sell. It's not a question of whether they want to, but they got to sell everything, right? So a little pressure goes a long way. I think I talked about iceberg risk last week. I don't know if you caught that show.
Oh, yeah.
Well, that's why I always wait for 3 days. So tomorrow, pretty much, and Thursday and Tuesday and Wednesday, I suspect, and if Apple doesn't blow up tomorrow night, then we're probably going to have all the shorts out that were on margin. All right, that were on margin on the downside, and also start seeing actually they'll start taking their profits. And the other side will be those people that wanted to get into Facebook will start nibbling and cause the people that haven't finished or haven't gotten out to shorting to start maybe a little bit of a short squeeze. So maybe back up to 185-ish or something on Facebook, maybe 180. Maybe it just starts an ABC down. But that's why I don't get all wigged out on any particular day, because there are organic reasons for things happening. But I think we've got a fairly nice setup here. Of course, this would be the kind of the first day of fun buying, but I don't think that people are going to race to do any fund buying until the Fed makes their announcement at 2 on Wednesday. So
David,
I think if you just sit on your hands, wait for stocks to have very light volume on the pullback, you're going to see which ones are the weak ones and which ones are the strong ones. And of course,
David,
go long the strong and short the weak.
You're saying a lot of this this tick action is just ETFs obligated to keep their portfolios balanced. Is that what you're saying?
That's the first part of it. The second part is high-frequency traders that hop on it, right?
Huh?
Just because it ticked down, you don't know if that's 1 share or 10 shares or 1,000 shares, right?
Well, that's true.
Yep, and probably half the volume on any given day, maybe a little less than that, is high-frequency trading. And so they're only trading that for the last, I don't know, 5 milliseconds, 15 milliseconds, maybe 100 milliseconds. I mean, so you get a lot of these ticks.
Yeah.
I kind of have wandered. The ticks used to be such beautiful indicators, long-term indicators, because everybody came in and out of them. That has kind of changed, in my opinion. One, because we've got so many different places where you can trade. When it was just if you can look at just the tick on the NYSE, on the floor traded, you can still get some decent ticks. But because of all these things are in many different locations, that tick now can either be exaggerated or minimized. When you've got 23, 26 places that a stock can actually trade, and two, they can make it look like those ticks are high, because 40% of all shares are not traded on anything that you see. That tick doesn't come through on all those dark pools. And it's anywhere from about 36 to 42% on a given day. You don't see those at all.
Sentiment of traders. Yeah, I get it. Okay.
So
thank you.
I mean, Einstein said everything that, you can count everything, but everything doesn't count. Forget what he said exactly. It was a lot wittier than that. But everything that you can count doesn't really count.
That discussion helped me understand this whole tick game. I
used to look at it a great deal. Tim Ord wrote some great pieces about it originally back in 1995, 1996. And man, did it work great for about 15 years. Then the high frequency traders came in at about 2007, and it's only gotten progressively worse. So can you make a little bit out of it? Yeah, but I'm talking about 5 minutes or 3 minute charts or something like that, maybe 10 minutes. Are the machines still running the market in the very short term, in the next 30 minutes or an hour? Yes. Do they run the market on a daytime basis? And the answer is no, because in the last 30 minutes to 45 minutes, those market on close orders come in, and those are the big orders that count, because they're not fake orders. They're not somebody owning a stock for 100 milliseconds. These are people that are going to own the stock for weeks and months, or sell the stock for weeks or months. And that's why I always kind of wait till the end of the day to make any kind of conclusions. Can you make money trading intraday? Yes. For me, it's kind of like an awful lot of work. I kind of think that at least for me, it's better to not have as much action and kind of take a 30,000 foot view of the market. I know other people are actively trading, and I did that for a while. It just was kind of like working for a daily wage, like an hourly wage. I had to make money that day, and I seem to be a lot happier and make a little bit more money by just kind of sitting back and waiting to take the fat pitch instead of trying to swing at everything. So I would just say that, like I said earlier, I spent a lot of time over the weekend trying to come up with some good signals and look at it both from the bear and the bull side at these markets. And there just isn't the glowing, burning bush signal out there to for me to go either long or short. I didn't think that there was a lot of downside today, but I didn't think that there was a lot of upside either. So, you know, that we're down 10 points now, it's no big deal to me. But in the last 30 minutes, we're going to see what the big boys that actually drive this market think. Now, they're going to mark this. They're going to mark the stocks up for fun buying, because that is the easiest suckers to go in there, because they always have to buy at the highs, no matter what. So the market, you know, they know that. They know that there's money coming in, and they'll just sit back. If you are thinking that the market is going to crack, to me, next week has a much better opportunity to do that than this week. But again, if Apple just blows up, that could change everything. But to this moment, I don't see anything in Apple in the charts. And we just have to go on what we see in the stocks. And there just aren't a lot of signals that I can find anywhere. And I've got my hands in my pockets. Maybe in somebody else's pocket.
Well, thanks, David, especially about the tick information. I get it. I have a feel for it now. Thank you.
Okay. Thank you very much.
Okay.
We'll be back. We'll be looking at a lot more stuff during the day.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And thanks, Mike. Wow. Thanks, Michael. He says Einstein's quote is, "Not everything that counts can be counted." And I think the rest of that is and everything that's counted does not count. I think that's a little longer one, but that's the one I always remember. What else do we have? Well, let's get a little bit of history, get into some charts today, as I'm thinking that for the most part, we're waiting for that Fed announcement at about 2. Of course, going to be a little bit about Apple, but we've got our old guy, Mr. Buffett himself, to keep that one in his pocket.
And it's all just a little bit of history repeating.
It is history repeating, and I think this is the one from Friday. I must have just spaced it all off. I'm blowing away history for the day. We're going to go on to something else. I think there was something I did. Maybe I deleted it. Who knows? We're going to give history the break it deserves. One day off out here. We're going to get into some charts because we already spent half the show already just talking about, can you trust your data? I love a podcast that comes out on Friday. It's called Data Skeptic, and it's in the vein of machine learning and other things of that ilk. But it's a lot about what you know about data, what you can infer about it. And one of the biggest problems with machine learning is having data that has missing parts, and sometimes deliberately misleading data. But I don't know. Call me a little bit of a data skeptic anymore since 2007 on intraday ticks. I don't think that they mean what they once did, although they're still indicative. I don't think in the short term, I don't think they're as indicative as they once were in the long term. You can give me a call at 877-927-6648. We're going to start looking at some of the ones that are moving out here today. Let's go ahead here and look at earnings. Caterpillar opened up a little higher. Everybody went after it. Now, these guys are saying that things are getting better, and everybody couldn't wait for this one to sell or to go after it to sell it today. But actually up guidance for the next year after telling everybody they probably had hit the high water mark for years to come. Well, they didn't say that at all. Opened up at 146.68, which is this gap down that had 6.8 million shares. We went up with it for 10. Just kind of everybody with a sour puss view of the world right now. So not going to be surprised. As I said, my guess is that we're starting to suck in a lot of shorts into that FOMC meeting. My guess is that they're going to be somewhat sanguine on rate hikes from now on, especially with some of all the other balls that are being juggled in the air by the U.S. at this time, and then we'll look at some of the other ones. Some of them opened up lower and moved higher. Let's take a look at Seagate, because this was one of the ones I thought would possibly be one of the weakest. These guys continue to get into the SSD market, the solid state drive market, and prices continue to fall. It's very tough for me to see these guys keep the kind of margins that they have long term, especially when they're not in the memory business and everybody is. You can buy some very cheap drives now. They're still doing well in the server business, high-end cloud business, but my guess is that there may be one Moore's generation, along with Western Digital, from being at the part where they just one day no one even considers buying spinning drives again. I think we're pretty close to that. The reliability of SSDs are now better than spinning drives, and the cost is only marginally more expensive now. And we're starting to see 2 and 4 terabyte SSDs. So 18 months, that would be one Moore's Law generation apart. I had a question about Intel and what's going on with it compared to AMD. Gap down on earnings. The earnings were not that bad. They said that they were going to wait another year to release their new products. And basically the street looked at that as a horrible, horrible news. Or at least that's what you would see if you went and started looking for the news. I think that there's something much bigger and problematic about this company, and that is that they couldn't find somebody in 4 weeks to take over, but they fired the CEO anyway. There was nothing in here that told me that they couldn't have waited another week, said that they had an investigation, got somebody to come in and made the announcement. I didn't understand the rush, but my guess is that there's a lot of these boards right now, from Papa John's to other, there's a lot of public infighting about what's going on. Now, why AMD is rushing to these lower die sizes, being able to put more in a smaller amount, reducing power. What we don't know yet is whether or not AMD has the yields, i.e. how many do they have to throw away? And according to Intel, if you listen to them, they're saying that anybody building these small things are going to be throwing a ton away. So my guess is Intel bounces probably fairly vigorously with a new CEO. And next year, we're going to see the real wrath of them coming out with their new memory, new motherboards to go with it, just a lot of stuff. And everybody just, man, they got on this one. Could it still go lower? It could. Would I buy it now? Probably not. I think you've got a little bit going on, but my guess is by 2020, this thing probably is a $75 stock. There's just nothing really slowing it down, other than the fact that the board is went after this guy for, I guess, a galley dated 10 years ago, which they knew about before it ever started. And so I'm just assuming they used that as a way to get him out of the show. Now, we did go back and test the low of April 2nd that had, what is that, 46.99, 67 million shares. We've done that today with half that volume so far, less than half that volume so far. So somewhere around this area. Does it have to go sideways? Would I give it 3 days still? The answer is yes. Would I even give it maybe till the end of the summer? I think the answer is yes. But my guess is this will settle out. We'll start hearing about all the products coming out in 2019. And my guess is that they will release those smaller die sizes when it actually becomes cost effective. AMD may have a huge problem, may not, but AMD may have a huge problems with just getting that yield up. Nobody's really done it yet, so we do not know. So yeah, lots of boards in turmoil. So talk about that when we come back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So if you listen to everybody, AMD was up higher today. AMD is cleaning the clock of Intel. The only thing is it's not. Now, you had a nice pop on earnings with 189 million shares. That's because people were short the end of their thingy on this. So you did break above the 1734.103. But I don't think this has, let me put it this way. I don't think this has a lot to do with consumer PCs. This, and when you dig back into it, NVDA, it's all about the video cards for these guys. So the idea that they can draw a smaller die size and actually make a lower powered processor, I don't think is that big of a deal yet. Now, in NVIDIA, they are down today, but this thing's basically been going sideways for 14 days. Today, volume is 6.6 million shares. A nice test of 223.26 on light volume might find some support, and you've also got that down at 220. We went a little higher, but for me, unless I start seeing some huge volume on the down days, which we kind of had a few, and then it instantly started to rally, I continue to think, if these things can pull back a bit on light volume, maybe into August, 1st of September, I think that's where we're probably set up for a rally into the fall. So if we start getting huge volume down days that last more than one day, if I start seeing a lot of charts that just are falling apart, that's one thing. To me, there were a lot of stocks that were up on just froth, and those are coming back, and they're not coming back on monster volume. There were a bunch of the ones I wanted to buy in Tech Insider, so I'm actually kind of happy. Those things have come back, and you know what? If they continue to come back, I'll be more than happy to buy them at a lower price. I haven't jumped yet, but again, if it's probably Apple, once we get by Apple and then the FOMC on Wednesday, my guess is everybody will be looking to play whack-a-mole and find the next big mover as we go higher. We've got a question to look at the IBB. We'll do that real quick. Yeah, we're off 13 points. You're getting real close to a good-looking buy point, and the IBB has no volume on the downside. When I looked at my sector indicators and into this area, they show that we probably are going to have a fairly decent low back here in the next handful of days. Now, maybe that's starts on Friday, maybe it starts on Thursday, but somewhere in here, we're coming back. You had a nice move higher on the 4 million shares. So far, we're down on 1.2 million shares. But again, especially with my sector indicators, it's one of the few that really shows you that you've got a handful, maybe on the high side when stocks are at highs, 5 to 10 days ahead. And it also tells you when you have about 3 to 5 days on the bottom. And we're in that 3 to 5 day range this week. So one of the better ones out here, you can look at it. So was it a blowout on this July 6th? Well, you were looking at 3 million shares and you got 4. So you got 25% more volume, which is all you needed. And now you're kind of pulling back. But today is a good indication. And especially tomorrow, we'll start seeing lighter volume. Wednesday, probably vapor volume from about 10:30 till the Fed. And if they don't say anything totally untoward, we could see that 113 area, maybe 112.50 on the IBB. And that would look very interesting to me. You broke out with volume, you went higher, you're pulling back, you've got a high volume high at 4.4 million shares. So maybe that's the sector that everybody's looking for the next run into for the fall. We've had a very long, let's take a look at the XLK. Very long run in technology. We've seen that fail with Facebook and Twitter. In fact, I've got an email here to ask about Twitter. But these guys have their own problems, and they're of their own making. They've ticked off the left. Now they're ticking off the right, and that is problematic. No one likes a censor. And I think, with those stocks being such a big part of the run, we're going to have to find those kind of finding a bottom before we go a lot further. Now, the XLK also had volume at the high. It had 15 million shares. It broke the last major high, that 11 million shares back on June 14th. So we've got high volume highs with volume in some of these. Now, volume came down heavily because of Facebook and Twitter. But what did you have on the 27th, 31 million shares? But as soon as that gets out and everybody starts figuring out what they're going after next, which is probably not going to be Facebook and probably not going to be Twitter, what's going to happen? Now, to me, the things I'm watching are things like Snap, because guess what? These guys get to see all the mistakes of their brethren. Now, this kind of came down, but again, got to $12 today, but it's got 21.4 million shares so far. That compares to, at this price, 50.5 million shares back on the, June 4th. So we're not certainly coming down with higher volume. In fact, this kind of just tailed out here a little bit. These things could be finding some nice levels. Now, what is the earnings date on that? Let me take a quick look. I think it's any day now. SNAP. August 7th. So we've got a little bit of time, about a week, for this to come down. And of course, if you look at the people shorting this, man, did they pile on Friday. So, you got a declining market, a lot of people piling on short, and a company that basically has been the innovator with Facebook stealing their ideas. If Facebook's basically all wound up in themselves because of the sins of their CFO and CEO. This could be pretty interesting. Now, I do think that we want to look at the retracement levels on this, and you're basically down here today at the 618, which is 1202 off this 1447 high. Basically you broke it with 2 cents and you're back up in it. Do I think this thing is instantly going to flip? No. It's got a monster short position. Keep an eye on it for a Wednesday afternoon.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a question of what I was looking at before, and that is ETFDB.com. You just type in the top, the symbol, whether it's a stock or a ETF, and you can see what it's in. But we talked about that last week for a little while. There's a book on Amazon called Iceberg Risk. And way before ETFs have gotten to the level that they are today, it shows that by adding these ETFs that everybody thinks are leveraged, they are in fact they are actually hedged. They are actually unhedged because everybody literally is hedged with them. The only way hedges work is if you have something that not everybody's doing, if everybody's doing it, everything else goes to hell in a handbasket with it. So, don't do much of it. What else do we want to look at here before the end of the day? Today just kind of flew through quickly, but I wanted to look at something here. What was it? So that, no. There we go. Okay, now I need to get back to that and that. Okay. Yeah. See out here. We looked at Caterpillar, Baker Hughes, AMG, FDC, L. Man, I think we looked at everything I wanted to look at today. There's just not that much going on out here. A lot of stocks have been higher. They've been lower. We kind of be out here flat. Again, last 30 minutes, the most important part of the day. Not much in the way of earnings tonight or tomorrow morning. It is and will be the focus is looking at Apple. And again, Buffett owns a lot of shares. They have the ability to buy a lot of shares at Apple. If Buffett picks up the phone, he can buy some. Apple can buy some. Man, it is a tough trade to go against that bunch. In the meantime, sell when you can, not when you have to. We will see you here tomorrow.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
No matter